You watch the price chop sideways. You take a long, it dumps. You flip short, it rallies. This endless, localized volatility is exactly how the majority of traders slowly bleed out their accounts before the real move even starts. The market is cooling off, and retail traders are misinterpreting this brief pause as a macro top, walking directly into a perfectly engineered trap. Welcome to Crypto Whale Radar, where we track institutional money flow. A genuine market distribution requires high-volume selling that breaks structural support. What we are experiencing right now is an algorithmic accumulation pause, a strict period of consolidation meant to flush out over-leveraged positions. Recognizing the structural difference between these two states is the single dividing line between capitalizing on the next wave and becoming market maker exit liquidity. To understand this pause, this chart maps the S&P 500's current trajectory. The equity market is cooling off, but the trend line remains horizontal, holding firmly onto its all-time high structural support without a corrective crash. Bitcoin is directly mirroring this S&P plateau. The price action is sluggish, but it is safely resting above the critical $72,000 to $76,000 support floor. If you look at the weekly stochastic RSI, you will see a glaring overbought warning signal, but relying on that isolated indicator in a high timeframe uptrend ignores the actual mechanics of the order book. This is a 30-minute fixed-range volume profile, mapping the exact concentration of traded volume. The heavy trading forms a bell curve along the y-axis, creating two strict horizontal boundaries, the value area high and the value area low. Trading algorithms are deliberately bouncing the price exactly between these two boundaries. Every touch of the edges trips retail stop losses on both sides of the trade. This recent spike down to $77,300 was a calculated wick. It briefly dipped below the value area low purely to grab liquidity before instantly snapping back into the middle of the range. This resulting chop confirms we are in an algorithmic accumulation phase designed to shake out weak hands, not a macro top. Zooming into the microstructure, this animated diagram illustrates a 2-hour rising wedge pattern governing Bitcoin's trajectory. It maps a 5-point Elliott Wave sequence constrained inside two converging diagonal lines. Inside that macro sequence, every upward push consists of a smaller 3-point ABC structure. The localized dip we are tracking right now is simply the mechanical completion of the fourth wave pullback, pausing exactly at the bottom boundary of the wedge. Amateur traders see this localized bearish divergence and repeatedly open short positions at every minor dip, convinced the trend is over. This liquidation heat map reveals the consequence of those retail shorts. The glowing red concentration shows a massive $140 million cluster of stop losses sitting directly at $79,600. Market makers are mathematically incentivized to push the price aggressively into that cluster. Sweeping those stops provides the exact liquidity required to fill large institutional orders. When we zoom out to the macro ascending channel, the completion point of our fifth Elliott Wave aligns flawlessly with the top of the channel, exactly at the $80,000 mark. When technical wave structures and order book liquidity clusters point to the exact same target, an explosive breakout is the highest probability outcome. On this Fibonacci retracement grid, we can identify the optimal entry zone required before the fifth wave surge. The glow highlights the 0.618 level, creating a strict entry parameter at $75,800. This exact Fibonacci level intersects perfectly with previous macro resistance, which has now flipped to confirmed structural support. Front-running a highly engineered liquidity grab requires execution speed. If you trade on an exchange with thin order books, you will suffer severe slippage right as the volatility spikes. I rely exclusively on BingX to navigate these volatile chop conditions. It provides the deep liquidity necessary to get orders filled precisely at the target. Using the partner link provided in the description unlocks specific exchange bonuses, giving you extra capital to deploy during these accumulation phases. Subscribe to the channel right now to receive these exact pre-breakout structural setups before the market makers sweep the board. Possessing the correct structural analysis means nothing if your execution platform slips your entry during the crucial volatility spike. This line graph measures Bitcoin dominance. The momentum is pushing upward, but it is colliding with a heavy resistance block sitting between 60.5 and 61%, showing early signs of curving downward. A rejection of Bitcoin dominance at this exact ceiling is the primary trigger for a massive capital rotation. When dominance falls while Bitcoin's price remains stable, altcoins begin to aggressively outperform. This dynamic applies to Ethereum. Here, the ETH chart shows the trend tightly squeezing against a rigid resistance ceiling at $2,400. Bitcoin sweeping $80,000, alongside a dominance rejection, provides the explosive catalyst required to finally pierce that ceiling. Solana operates on a slightly different cadence, with its immediate critical support floor currently established at $85. If Bitcoin dips to grab its 75.8K golden pocket, expect Solana to print a brief, sharp wick down to $81.50 before reversing. The major altcoins are coiled springs. Their upward velocity is entirely dependent on Bitcoin's dominance rejection, dictating the start of the capital rotation. Every structural thesis requires a rigid downside risk protocol. We have to map exactly what happens if the 75.8K golden pocket support fails to hold. This chart displays our macro floor at $72,000. Losing this completely invalidates the squeeze thesis. The immediate consequence is a high-velocity freefall, dragging the price straight down into the $50,000 to $60,000 range. To survive this environment, adhere to 3 master rules. Rule 1. Never open short positions in the middle of a sideways accumulation chop. Rule 2. Wait for the algorithm to sweep the liquidity and target the $80,000 cluster. Rule 3. Cut all risk instantly if the $72,000 macro floor breaks. With Bitcoin preparing its sweep, the capital rotation into altcoins is the next trade. Click the video on your screen to see the specific altcoin targets we are tracking for when Bitcoin dominance rejects. Strict adherence to predefined risk models and invalidation levels is the only thing that separates institutional whales from retail casualties.